Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, TGIF, everybody. It's Friday, January 31st, and we got a bunch of economic news releases scheduled for today. So we're going to jump right into it. We'll start off with the Employment Cost Index for the fourth quarter. We had a 0.4% increase in the initial one, and we figured it would remain the same. It went up slightly, up to 0.5%. We also have the personal income for the month of December. So we had a 0.2% in November. The forecast for December was supposed to go up a 0.1, and it actually nil. So basically, on average, people didn't make more money. Consumer spending, on the other half, people are obviously out spending. We had a 0.6% in November. We had a 0.2% forecast for the month of December, and it jumped up to 0.4%. So people are actually pulling money out of their savings and actually spending out there. And then we got the manufacturing in the Chicago region, which is the Chicago PMI for the month of January. We had a 60.8 reading. Anything above 50 is considered expansion. And we had a 59.8 forecast. And it came in at 59.6, so a little bit under what the forecasts were. It did dip a little bit. So again, we have to kind of keep an eye, but it did still above in the expansion range. And last but not least, we got the University of Michigan's Consumer Sentiment Index. So we had an earlier revision or earlier number that came out earlier in the month, and then we get the final revision. So for final revision for December, we had 82.5, and forecast for January was 81, and it came in at 81.2. So slightly above the forecast, but again, it did dip from last month. So we'll have to kind of watch and see if people are feeling better about the economy or worse if this continues trending. But the main concerns here seems to be from people are worries about jobs and stuff. So let's go ahead and take a look at the headline news. And the only report we really got today is stock market was down. Now, earlier in the day when we first started, it was actually down quite a bit. The Dow was down over 200 for the day, but since we pulled from there the last couple hours, it's actually come down a little bit. So it's about a little over 100 right now. So it's progressed quite a bit. So we had a 50% correction basically. So let's go ahead and take a look at the bond market, see how this is playing out. So we had a nice opening day or pull, so we're up quite a bit from where we left off yesterday. So we had an opening gap. Now, of that opening gap, we were actually up another 15-20 basis points, and that actually touched on the 200-day moving average. We were actually up at 101.65 at one point and pulled back. Right now we're at 101.41, which yesterday's close was at 101.25. So we had a nice day yesterday. We pulled back and improved for the day, and we're still better, but we could potentially close that gap at some point today as investors kind of go through the numbers. A lot of it for the investors was the earnings reports that came out. There, like Mattel and Amazon came in more disappointing. There's a few others, but you had a few tech companies like Zynga came in, jumped up quite a bit. So little mixed earnings reports, which kind of freaked them out a little bit, and they got a little mixed bag of economic news that were on top of that. So as they sorted out, we could potentially close up, but I would say that we're still going to stay in that range. Maybe have a better pricing today, or worst case scenario, maybe we have the same as we left off yesterday. But good day today for the for interest rates so far. All right, folks. Hope you guys have a wonderful weekend, and we'll see you guys next week. We do got some important news next week, especially on Friday will be the big day next week when we have the jobs numbers coming out for the month of January. All right, folks. Have a wonderful day, and we'll see you guys on Monday. Thanks for watching.